This is the Business Stuff Podcast. This is where I will share the lessons I've learned from advising thousands of businesses over almost 30 years. Each episode will give you practical insight to allow you to learn from other people's mistakes. I'll be pulling in experts from our team and the world of business, and together we'll make sure your business is giving you what you want. My name is Martin, and this is the Business Stuff Podcast. Hi, it's Martin here from the Accelerator team. I'm here with Kieran, who's one of our in-house accountancy team. Hi Kieran, how are you doing?
Yeah, not too bad, man. Thanks for having us.
And today we're going to talk about, do you need an accountant? This isn't the sales pitch for Robson Laidler,
No.
But of course if you want to know more about Robson Laidler, we'll happily help you. But yeah. So in a nutshell, before we break this question down, do we need an accountant? Is it worth talking about what is an accountant?
Yeah, I suppose it is. Otherwise,
Otherwise you don't know what it is you need.
Exactly. So, an accountant's, it's quite a bit of a difficult one to say because, anyone can call themselves an accountant. But obviously, chartered accountants, they're sort of backed by, your professional bodies and, they've got to stay up to date with everything going on in the finance world, keep up their, training, CPDs, everything like that. So...
Because it's worth saying, and sorry Kieran, but and we'll come on to the full answer, but no, you don't have to have an accountant for most people. But what do people mean by an accountant? And I presume that the simple answer from the man on the street would probably be, well, someone who helps me submit my accounts.
Yeah, in a bog standard way,
but that could be anything, because accountant isn't a protected characteristic like solicitor or doctor. You can pretend to be an accountant.
Yeah, exactly that,
and people often do, and that's where businesses can get into
quite a bit of bother.
Have some unusual outcomes. Mm-hmm. So, I suppose we should really say what some of the advantages of a qualified accountant are, and this isn't to belittle the people who aren't qualified accountants. No. There are some really good people who've been doing this for 40, 50, they know what they're doing. Yeah. But if you're qualified, there's some things that come with that, like you've got to demonstrate continual education
and development,
that you're being trained, you're up to date. Normally there's insurance regulations. Yeah. You've got to stipulate a certain level of income, which is handy because if you get bad advice, you want to know that they're good for it, for want of a better way of putting it. But also, some things that people don't always look at are things like continuation plans. Yeah. So at Robson Laidler, if you fell down tomorrow, there's a team around you that would fill in.
Exactly.
Now, even if there wasn't, if you were a qualified accountant, they normally insist that you have a continuation plan, someone who will step in and look after your clients if
should something ever happen. Yeah, exactly that.
So for instance, I know someone who uses an advisor at the moment who's unwell and there is nobody looking after what they're doing. Right. If that was a qualified firm, there would be a contingency plan, a disaster recovery plan, for want of a better word, where there would be a predetermined person who would step in and fill in that place.
All right. Yeah.
So that's some of the reasons why you think about what an accountant actually is, I suppose.
Well, it is, exactly.
But the short answer is no, you don't need an accountant.
No, you don't need an accountant, which is quite weird for an accountancy firm to say, no, you don't actually need us. Why are you here, sort of thing. But that's sort of what we're trying to demonstrate. But
there are some exceptions though.
Yes.
So the odd couple of people who do need someone. Yeah. Who are they?
Yeah. So obviously charities tend to be a bit more heavily regulated. So the Charity Commission tend to, you legally got to have someone, an accountant, to be able to do it. Anyone who has to legally submit an audit, they've got to do it because you can't technically do an audit yourself.
You can't audit yourself.
Yeah, exactly.
Yeah. And the charities is a version of that, isn't it?
It is. It's small.
We did a great episode with it was Liam, I think, wasn't it, James? Yeah. So Liam did a good episode about part of the reasons why charities get sign off from other people. Yeah. And again, it's any time there's a check where you need to verify what people have done with the money, which is what an audit is. So solicitors have audits. Yeah. So large companies have audits. They need to be externally signed off.
Yeah, they do. Yeah, exactly.
So if we ignore that, then and I've got some examples there with there's other occasions when it's helpful
to have an accountant,
like if you're trying to borrow money, pull a business plan together. Yeah. It gives a bit of credibility, doesn't it?
Yeah, and a bit of reassurance for those lenders. If it is you're applying for finance, stuff like that, they can see, you've got a professional body behind you, someone that is, that's looking at the books, keeping everything up to date, making sure it's accurate and correct. And it brings that, you see, you're probably more likely to get the finance there.
It's not that you can't borrow money without an accountant,
but
if you're pulling together a cash flow for the next 2 years, it'll give the lender a little bit of comfort that
Yes.
someone who knows what they're doing has looked
It's
over.
sort of on it, yeah. Exactly that, yeah. So although it's not a legal requirement, it is handy to have. And yeah.
Yeah, okay then. So moving on then, why would you want to volunteer to pay people like us money then, Kieran?
Yeah. So I mean, there's quite a few reasons. Quite a few of our clients do it. I mean, the main one tends to be outsourcing. Just they don't have the time, and they want the reassurance that it is correct and the insurance that what they're getting is the finances are all right. Their cash flow, like you say, would be correct if they needed last minute finance here or there. There's a lot of changes within the financing world every year. There's, like you said, 2 changes normally happens with the budget, and it's a lot for people to keep up with, especially when you're trying to run your business full time.
Because I mean, we've talked in the past. We've done some episodes on things like the 10 hats. You're the marketing team, you're the HR team, you're the sales team, you're everything.
Yeah.
The finance team within a business is normally restricted to raising invoices, marking off payments, and sending
credit control,
out.
all that. Yeah.
You probably don't really also want to learn how to do a whole other job when you're already under pressure to do all of the other things anyway.
And I mean, you could, but like you say, you could build your own house if you really want to do that sort of thing, but you don't have to. So obviously, offloading it to someone who's got the knowledge.
You don't have to, but you probably shouldn't.
You probably shouldn't. You definitely shouldn't.
You know what you're doing, and that's the whole point, isn't it?
It is,
each person has their own thing they're good at.
Yeah.
It's not to say you haven't got business owners who are very financially literate. You do, and we know so.
Yeah, absolutely.
But again, just because you can do something and you could theoretically do it, you don't normally.
Exactly. And then obviously, if you're somewhere like us where you've got the knowledge of a massive group of people together, we're not just one person and stuff like that. So it's a lot of different things, and you need a quick query, rather than spending 3-4 hours looking it up, pick up the phone, ask your accountant, and they should know. Yeah. There's a lot of things like that. There's a lot to consider why you should have an accountant and why you should need one.
I think that's an often underplayed thing as well. So we build into everything we do something we call quick queries.
Yeah.
Pick the phone up and say, what about this? And it might seem like a fairly basic question, but it can quite easily just go wrong if you don't. But also I think, and we've talked about AI and things like Google in the past, all of the information is out there. Yeah. We aren't just data hoarders. What we are is we filter and sort the bit you need to answer the question you should have asked us, which isn't not always the question you did ask us.
Exactly,
So again, you've got your time savings, you've got the benefit of the experience. It's probably worth saying as well that not all accountants are created equally. I don't mean qualified versus unqualified, but there's a lot of services that come out of the accountancy world. Tax advice, for instance. I'm a chartered tax advisor. I'm not an accountant. Don't get me to do your balance sheet or your profit and loss. But if you want to know how to pay the tax on it, I'm
you're the guy. That's it. And I suppose that's sort of why obviously Robson Laidler works quite well, because you've got all the different firms that talk to each other and link their knowledge together. So when you do have an account, you're not just, if it is just a one-man band, then you want to get the one-man band. If you come up with a bigger firm, then you're getting access to little pockets of knowledge in different departments here, there and everywhere. So it's also, adds on to another reason why.
Yeah, but also I think on the experience there, the shared experience, I think even a one-man band or a one-woman band, a single-person firm, they're still learning and experiencing multiple businesses for years.
Exactly.
So anything you come across, it would be very unusual if your accountant hasn't come across exactly that thing.
Before. Yeah, exactly.
How do I get over the hump when I've got to register for VAT for the first time? How do I set up a payroll? How do I do this? These are all everyday questions for accountants because they deal with them all the time. So you benefit not just from the experience, in our example, of 100 and odd people across a couple of offices, thousands of years worth of combined knowledge, but even a single accountant has probably
got a fair share.
So much business knowledge and experience.
Oh, absolutely. And I mean,
it'd be a shame not to tap into that, wouldn't it?
Well, it would be, yeah. And I mean, us accountants, we all sort of learn from each other's mistakes as well and build on that. Sort of take it as a learning curve, and we share that experience with one another. We don't just hoard that. We do like sharing. It's not just.
I like that. We don't just hoard.
We don't hoard that information. Yeah, no, we do. If we see something's going to happen with it, I've seen this happen before. Even if it's not even in our firm, we're not going to keep that to ourselves. We'd like to help the profession and help everyone around us. So yeah.
Good. So one of the other things as well is you probably heard this before. Well, how much will it cost? Well, it doesn't matter because you're going to save me more than it costs. That's not guaranteed, is it?
No.
Because you might actually be doing everything right. Or if you've got a very simple business, there isn't often much you can get wrong anyway.
No, not really.
But we do see a lot of examples where very simple things could have gone wrong and we intercept them.
Yeah, I mean...
And so how does that work? Because a lot of accountants will just think, well, a lot of business owners might think, you're just filling a form in.
Yeah.
That's expensive for filling a form in.
Well, that's it, yeah.
What do we do beyond that?
But the thing is, like you say, that generally the clients only tend to see the form. They don't get to see, the hours of work that's put in the background.
So what kind of things go into those hours of work?
Yeah,
what's when we're saying they get a peace of mind or a reassurance?
Yeah.
Why is that?
Obviously, it's like, it's kind of like having some way of putting it, to like having an audit in a way. So we're going through each transaction line by line, categorising it to the right place, making sure the expenses are categorised, whether they're capital expenses.
So that's why we're doing the bookkeeping as well.
The general day-to-day books, everything like that. But then after you've done all that, you've pulled together your trial balance, you've got the more nitty-gritty accounting standards and reporting.
People might not know what a trial balance is.
Yeah, so trial balance is sort of compressed of your profit and loss for the year, all your expenses, all your income, work out your profit or loss, and then your balance sheet as well, which is obviously all your assets, your liability, and your equity. So
it's basically it's a list of all of the values that make up your accounts.
Yeah.
So marketing is a line on your profit and loss.
Yeah.
Well, there's also an entry on your trial balance. In theory, you can break that down and see what went into that figure.
Yeah.
So we pull together all of those.
All the information, and you can find, you can look into a certain transaction, you could go into a line of that, and you can find where it's come from, where it's going, everything like that. Yeah. But yeah, and then obviously once you've pulled together that information, which probably takes a majority amount of time actually pulling it, especially if you've got clients that bring in like shoebox worth of paperwork. Yeah. Then,
which we love.
Oh, we do, yeah.
Kieran loves shoeboxes.
Oh yeah, keep bringing them. But yeah, obviously once you've got all that, you've then got all the reporting standards that we've got to adhere to, all the legal requirements that's got to be in there, all the notes, stuff like that, which all the nitty gritty that if it could be missed, obviously could cause a lot of problems.
Because someone really conscientious could probably be reasonably expected to collate all of their income and expenses, all of their asset values and liabilities. Yeah. They could get to the trial balance stage probably with some certainty, with a bit of care in learning the categories, etc. Yeah. But the reporting standards, that's not where, something you can trip over, is it?
No, it's not.
You can't just
it's a bit of a
be efficient and get there. Yeah. You need to know it or you don't.
Yeah, and obviously different trades come with different standards. I mean, if you're in the health industry, there's a lot of general practice notes that's got to go in. If you're in property, there's property notes with securing debts, everything like that. So there's a lot more to it that needs to be in there.
Transactions with directors, if you
related part,
who
everything
controls the company. There's a lot of things you need to know about.
Yeah, and then obviously once you've done that, that's when obviously you guys come in with the tax. Everything to do with capital allowances on that capital expenditure, which would be your assets, like your new laptop, stuff like that. Yeah. There's a lot of stuff, and then like you were saying before, I'm going to pay you this, you can save me more money. It's not always the case. Obviously, there is sometimes with the new capital allowances that came in during COVID with the enhanced allowance of 130%, stuff like that we can do, which generally you might not know if you don't keep up to date with the financial reportings. But yeah, stuff like that. I think there's a lot more goes into it behind the scenes than what people tend to realise. But it's the same like solicitors. If you're moving house, you're thinking, well, they're only filling in a form.
You can theoretically convey your own house.
Yeah, well, exactly. Yeah, you could.
You tend not to.
You tend not to. Yeah.
And you don't question that either. It's just
That's the
We had a laugh before we started as well. You wouldn't normally do your own dentistry, would you?
No,
some people do. And we're big fans of Bob Mortimer.
Yes.
Google Bob Mortimer dentistry if you want to laugh.
Exactly.
But you wouldn't normally. And again, people don't question that. You just think, well, of course you'd go and do that. Yeah. You mentioned then, Kieran, so of course, you've pulled together this trial balance, which most people won't even ever see what that is. They won't know what it is. But it's a summary of all the income, expenses, assets, and liabilities. Yeah. That goes into a formatted set of accounts. Yeah. A good accountant will then be able to look at that and spot trends and see if it just feels right, won't it?
I mean, to an accountant, a set of accounts, it's like the Bible, the Holy Grail sort of thing. It's like
that speaks to you about
it's a story. Yeah, you could look at the figures and see what's going on. You could pinpoint things that don't look right and do look right, which could sort issues out in the future. But then it could also sort out key advantages that the clients may not be looking at. And something might not be right in the balance sheet. Why don't we do A, B, and C, and we can sort this?
Yeah.
And like cash flow and stuff like that, you can use off there. But it's like reading a story. Any account should be able to pick them up and go, oh, what's going on here?
Yeah. Because also, again, because you're doing, dozens of accounts per month, then you would get a feel for what a business should have in there.
Yeah.
If you look at 20 builders across the year, and one of them's, the figures don't look anything like the other builders, you can do that kind of internal benchmarking, can't you?
Well, you can,
so, hold on, that doesn't look right. Why have you got no materials? Where are your materials? Why are your materials so high? Because we are doing that pre-filter because we know what the inland revenue are going to look at, don't we?
Yeah. So we've sort of got that hindsight, like you say, where you've got a peace of mind where you've got someone looking at it that's going to know if the revenue comes knocking at my door, they can tell me before that happens what's going to.
So we can intercept those things before they turn into an inquiry.
Yeah, exactly. Sort of either get the issue sorted, that if there is an issue, or when we'll have an end of year meeting, we can iron out any creases that we might have. So yeah, I think that's sort of key, as well as having that communication between accountants as well, which is almost quite key in a business, I'd say. So rather than just getting them emailed to you, there you go. Coming in, actually seeing your advisor and your accountant and walking through is probably key to why you actually need one.
I was going to ask you what the biggest area of breakdown is on this, and I think you might have already answered, but feel free to add something else. Yeah. But it really does just work better when you speak to your accountant before you do anything big.
Yeah. No,
like I
can't stress that enough.
Yeah.
But yeah, especially
because too often it's like, what was that then? Oh yeah, I did that in the year.
Why didn't you speak to me sooner?
Why did you not do this?
Yeah.
And some of these things can make quite a big difference.
I mean,
financially, they're not be big numbers, but as a percentage of take home for a business, they can be fairly substantial matters, can't they?
Yeah, exactly. I mean, sort of key one to go over is company cars and limited company. I've had numerous clients this week, actually today, even ask me, "Oh, is it worth getting a company car?" I'm thinking about getting this diesel SUV. I'm thinking, "Oh, don't do that.
Get a Chelsea tractor.
Exactly, don't get
No, it's just punitive tax rates.
Exactly, and differences between getting electric versus diesel and petrol, hybrids, that sort of thing. Yeah. All that knowledge that we've got stored.
Because it's a very basic question. Should I get a company car?
Yeah.
What sounds like a great idea.
It does, doesn't it?
Because when you're an employee, someone goes, "Do you want a company car?" You normally go, "Yeah, why not?" Yeah. But if you're the business, you're paying for both sides of that transaction. Exactly, you should do it as efficiently as possible.
Exactly, and then obviously you've got your benefits in kinds and P11Ds and all that sort of stuff that comes with it. So there's loads of different things, but yeah.
At what point do you think, in everyone's got their own opinion on this, but I always think having an accountant, the amount of need for an accountant goes through waves or stages.
Yeah.
Like a very small business will need a little bit of interaction. Yeah. There should be enough interaction, but you shouldn't spend a fortune.
Yeah.
As you grow, you might then get your account, you might get the payroll, your back work done, your bookkeeping. Yeah. But once you get over a certain level, you'll probably want to get someone internally to internally do your bookkeeping, maybe your payroll, take your VAT returns back.
Yeah.
And free your accountant up to do other stuff.
Yeah, which then...
Because you're bigger by now, so they're answering different questions in a different way.
Yeah, that's it. I mean, it's sort of, when a business starts, like you say, there's not much to it. They might need a bit of hand holding to make sure that their reporting's right, because obviously you've got to retain your records for so many years, otherwise you suffer fines, stuff like that. Just little guidance, little bits of knowledge like that.
Do it efficiently and...
to keep them on the right tracks. Software, which is a big thing with Making Tax Digital. Making sure that everything's right and in place to get them started, rather than just setting them away, coming a few months down the line saying, "Oh, you need to go back 3 months and do this," and it's like a massive...
that 3 weeks you spent pulling that all into a spreadsheet, you have to do it again because it's all wrong.
Exactly, so it's time spent at the start to smooth out the processes throughout, and then like you say, as the business grows and develops, you're going to go over the VAT threshold, so all of that registration, get employees in, payroll, and as it sort of reaches a certain stage in the company's life, you do tend to question, should I be taking more off my accountant and bringing someone in-house?
Yeah.
Which some people like to weigh up, because sometimes it can cost more to hire someone, or sometimes it costs more to have us, or an accountant. And then obviously naturally progression is take more in-house, We then do more of the accounts and more advisory side of stuff.
More the hard technical tax questions,
Yeah.
your R&D claims,
Because the more you grow,
because you get big enough. And,
yeah, exactly, yeah. And it sort of just frees up our time to give you more, better service accountants as a whole. So,
yeah. One thing that I often get asked, and I don't think clients always necessarily appreciate, is the difference between bookkeeping and accounts.
Yeah.
And I always kind of say, well, bookkeeping is one of those things where the business owner can do it internally, or we could do it, but it's not to be confused with the accounts.
Yeah, completely.
Because the accountant's work normally would start when the books have already been written.
Yeah.
Although we do also do bookkeeping.
Exactly. So bookkeeping.
How would you, as an accountant, summarise the difference?
Yeah, it's a good question, because people tend to just merge the two together, completely separate.
Yeah.
Bookkeeping is your day-to-day transactions, keeping your books and records up to date.
So when you say books and records, what does that mean? Because we use that as shorthand, but what does that actually mean?
So basically it's just, if you go back quite a few years, it used to be, if you were a hairdresser, you had a cash book.
It was a literal book.
It was a literal book,
you wrote the day's takings in.
A simple like study book, anything, you just wrote the takings, wrote the expenses you might have had. But nowadays it's more, with making tax digital, you've got to bring the software in, it's keeping your receipts a digital copy, making sure you're reconciling the banks, so you're marking the transactions to each categories, expenses.
Just expand on reconciling them, because again, I know we know, but so you see 49 quid come out the bank.
Yeah, you've then got to categorise.
Wix, make sure you've got a receipt from Wix for 49 quid.
To tie it off to that transaction.
To match them up.
Yeah, and then it goes back to what we say about your trial balance. It then sits in the trial balance in your profit and loss, where it could be, general repairs from Wix, like you say, 30 quid. It sits in there. And then keeping all them up to date, matching everything off, and then it's just a bit of housekeeping really. Once that's all done, everything's up to date, or your VAT returns have been filed, stuff like that, which is why bookkeeping is quite important, because you need to know the VAT rates on your transactions, on your sales, all your expenses, making sure that's right. All that's done, that's when it's then passed off to the accountant once the year's done, and they collate all the information, do what I say, like a mini audit, as we say.
So it's important to pick that up as well, because when you say we check every line, you would do that if you're doing the bookkeeping, but if you get someone's books complete, you would spot check based on the attitude to risk, type of business,
type of sample testing.
You know the client, so you know whether you can believe their records. Or, I don't mean in a dishonest way, but whether you trust their effort, let's put it that way.
Yeah, that's best way to put it. But
because we've met some of our clients.
Oh yeah. Well, but and you say spot checking, just checking the nominals. Each, you want to check motor expenses have got the right.
Using your terms, nominal.
Nominal, yes. Nominals just means sort of different categories. Yeah, so your motor expenses, your repairs and renewals, your sales, your marketing,
telephone costs. Yeah,
everything like.
So nominal code is how we would.
It's our term of use,
the trial balance.
So it's like we would do a spot check on telephone, for example. You would expect just transactions to be in there, O2, whatever. And if we start seeing, you say Wix and all that.
Aviva, Wix, you go, well, why is Aviva and Wix in there? There shouldn't be.
Unless they've started a new telephone service, then that's it. But
and again, old-fashioned, like 4 quarters of phone bills from BT. Well,
you would expect.
You've only got 3. Where's your July one?
Yeah.
So again, you do that common sense check, don't you?
It is. Then once that's done, that's when you collate all the information together, you put all the notes in, check all the standards are all correct, and then you move on to more the tax side of stuff and pull everything there. But
Good. Okay then. So what do you think is the biggest mistake that you see people make at the moment, and Kieran, and you can answer this however you want. Obviously, it would be tempting to say, well, they don't use an accountant, but what do you think is the thing that most people get wrong who probably don't have an accountant then?
I think if for most that sort of do, like you say, the bookkeeping and the accounts themselves, it's more, if they're VAT registered, I see quite a lot the wrong tax. So that's quite a tricky subject, I would say. Using, I had one case a little while ago where they were a chocolate making company, but they also made cakes. And obviously there's different treatments on cakes and chocolates, and all of the wrong rates were being used. So when we got the information, we sort of looked and thought, you've actually lost 20% of your income on this because you've charged it. And if you want to resolve this, you then got to send it back to all your customers. But obviously in shops and stores and that, it's impossible to do.
Contract them random customers.
No, you can't. No. Especially if people are paying cash, you can't.
That is an interesting one. But I'll give you an example I had of someone who who basically had bought some rounds of golf, asked me to play, and said, "Oh, I've only done this because it comes off my tax bill." I was like, "All right, couple of things there then."
Yeah.
We'll call him Dave.
Yeah.
So first of all, entertaining isn't an allowable expense.
Yeah.
People don't realise that.
No,
you can get the company to pay for it. You can pay for your employees to entertain people.
Yeah.
So it's a legitimate business cost, but it's not a tax allowable expense.
Yeah.
And also, you can't recover the VAT on it.
No.
Because again, you can't recover the VAT on entertaining.
Yeah.
So, but it's even more interesting on this lad actually thought it came off his tax bill. I was like, well, it wouldn't come off your tax, it would come off your profit.
Yeah.
But even entertaining doesn't even come off your profit.
Yeah, it gets
so
added back
he
on,
thought the grand or so he'd spent on these 4 balls was literally coming off his tax bill. He was quite upset with it.
Ruined his day.
I was like, why did he think that? He says, oh, the bloody, the marketing team at the golf course told us. I was like, saying, well, why are you getting your tax advice?
From
Off someone trying to sell you something.
Yeah, exactly. Yeah, that's it.
I mean, obviously we're trying to sell tax services, but that's slightly different.
Yeah.
But he was blown away when he realised. He was like, well, that's not very good value at all, is it? I went, no, but I'm glad you brought us. Thank you very much.
I mean, yeah.
I bought him a drink when we're finished.
Just the stuff of the blow. Yeah. But yeah, I mean, another great example is entertainment. I mean, just going back to what knowledge is. I mean, that's also another massive sort of subject touching, because certain things we don't do, like, it's allowable and isn't, with Christmas party, stuff £150 per head, but there's so much nitty gritty that is allowable, it's not allowable, and
stuff entertaining, when's it taxable, when's it not.
Well, exactly, yeah.
Because I mean, an example came up recently. It was Dan mentioned it. He'd overheard a conversation where someone said, "Oh yeah, just put all of your meals through." Like, well, no, there's very strict rules on what you can and
food
can't
and drink,
claim.
yeah.
And again, some of these are really hard to find the answers on, aren't they?
Yeah, well, they are, and then that's when it sort of comes down to knowledge again, like you say, and experience.
Yeah.
Where, rather than saving you 5 hours looking this up because it's a bit of a rabbit hole to go down, we've already dealt with it more than likely as accountants. So.
And that time trade-off, I think, is the most important thing here with anything. So you could build your own house,
yes.
But do you want to learn how to, what depth foundations you need, what size, what the permitted what you're allowed to build in a city, all of those questions. Yeah, I'm sure you can mix cement and stick bricks together, but if you think that's building a house, you're dramatically underestimating the gig, aren't you? And again, I'm sure I could tile that wall if I wanted to, but it would take us a lot longer than a tiler. Yeah. So everything you do, you're trading your time for theirs, aren't you?
That's
and I think some people often think, well, accountants, I'm paying you quite a bit. How long is it going to take you? I think that's the wrong question. It's how much time am I going to save you by me doing this? Yeah. How many days' work am I freeing you up? You can go and do, 2 weeks worth of work in the time it takes me to do 3 days' work for you. Yeah. But that's a good trade.
I think it is.
You're getting 10 days for the price of 3. Yeah. It's got nothing to do with the rate. It's the time, I think, is the biggest thing. Yeah.
I think it is, exactly. Yeah, like you say, Tyler could do it a lot quicker than what you could. And obviously, we could do your accounting chats.
I mean, I'm a pretty badass Tyler, maybe.
I'll take your word for it. But
I have no examples.
No.
I just imagine I would be good at it.
No, I can imagine. But yeah, it is. It's a trade of time, just with a monetary value to it, and that's it. Yeah.
So I mean, is that what you think your biggest mistake that people are making here then, or
I think there's so much.
We'll flip it then, because we get records in from people who think they've done their books. Mm-hmm. What's the biggest mistake? So what do you just know every time you go, I'll check that first because it's always wrong? Yeah. What are people getting wrong?
I mean, you sort of covered it, entertainment straight away. You sort of go for travel and subsistence. That would be a go-to, but if it's a lot larger than what you would expect, and if you've got, trying to think of an example here, if you've got, like you say, a dentist, and they're travelling subsistence quite high, you're thinking, are they doing,
home visits?
Home visits, yeah.
How does that work?
Yeah, so, you would look at that and it would be full of like meals out, like treating, clients or anything like that, and that's sort of straight away entertainment, straight away.
Because you get this disconnect, don't you, where clients go, but I didn't make any money, how have I got a tax bill? Yeah. And I think a lot of times people don't realise there's a difference between the profit per the account and the taxable profit.
Yes.
And a simple example here would be of one of the many things. You might have got 10 grand in and spent 10 grand on entertaining and made no money. cash-wise, you have no money left.
Yeah.
But for tax purposes, you made 10 grand.
Yeah.
Because you don't deduct the 10 grand's worth of entertaining. So there's often a disconnect there, isn't there?
There is, yeah.
Where people go, well, I've got a tax bill, I didn't make any money. It's because you
and then you look like the bad guy
spending your money
doing
on
it,
stuff that isn't essential to the business.
Exactly, yeah. And then it, even again, all boils down to knowledge. But I think another one that's sort of key is, you know, I've had a few recently limited companies, you know, directors are going out and spending fuel, and it's saying, but you don't have a company car.
Yeah,
you know?
the company has no fuel cost.
Yeah,
why are you putting fuel through the company?
Oh, but I'm using my personal car. That's brilliant. I mean, that's absolutely fine, but you can't claim the fuel costs, but you can claim the mileage allowance.
Mileage rate for business journeys.
Exactly, yeah. And then it all boils down to, oh, well, I don't have a mileage log. And this is obviously something that should have been spoken about when I said business starting off, getting them systems in place first. And this is why, so early on, why you should at least have a conversation with the accountant.
I always talk about, after many years, I came up with it with the example of, even though you own the business and you are the director doing the work and the worker doing the work, I think you still have to think of the company as a mean boss.
Yeah.
And it took us years to come up with a simple way of saying it, a mean but fair boss.
Yeah.
Well, a mean boss wouldn't pay you to go and have your lunch every day at the coffee shop next door. So HMRC probably wouldn't want you to do that either.
Yeah.
However, they might be happy for you to drive to Leeds for that sales call because that was a business journey. So I'll give you the mileage for that. So they're fair, but they're mean. They wouldn't want to give you anything frivolous, but they'll reimburse any legitimate expense.
Yeah. But I think they're mainly the two, well, three if you include that, are the biggest errors I sort of see. And you sort of look at straight away just to see what's going on and forewarn them when you come to have that year-end accounts, just heads up, this has been done wrong.
Yeah.
So obviously they've, if they are doing their bookkeeping every day, they're expecting their profits and tax to be what they've estimated.
Yeah.
And then when we come out into the completely different figure, they're like, well, how have you got that?
Yeah.
This is why. And then list out the reasons. Obviously next year going forward, issues aren't there anymore, but it's still taking the hit.
This is another good reason for giving your records to your accountant as quick as possible after your year end, because
you don't want to repeat the
if
same
you don't hand
mistakes.
your records over for 9 months after the year end, you've already made that mistake for another 9 months by then, haven't you?
Yeah, exactly that.
Yeah.
It just outlines the urgency to, as soon as your year ends in, just drop them off straight away.
Yeah.
No.
Okay, thank you very much, Kieran.
No,
thanks for coming on. So that, like I say, the simple answer is no, but with a little asterisk. So I hope you found that useful. It's always quite a hard one to try and, we're not trying to sell accountancy here.
Just trying to develop an understanding of
just trying to explain to you,
what we do and why we do it.
What you actually do. And it's quite weird because if one way to answer whether you need an accountant is, whatever you do, if someone said, do I need someone to help me with marketing? You kind of go, well, you don't have to. You don't mind your marketing being bad.
But it just takes off one of your 10 hats.
Tile your own house, but is your tiling going to be as good as a tiler's? But strangely, people don't apply that to accountants. And you go like, oh well, I can do that. I'm sure you can, and I wish you well. If you don't want to, we're happy to help.
Exactly, absolutely.
Thanks very much. See you next time.
Thank you.